Good Thursday morning, Market Chameleons and everyone joining us for the first time. Thanks for joining the Market Chameleon pre-market show with myself, Will McBride, and my partner there, Dimitri Pargamonic. How you doing, Dima?
Hey, Will, how are you?
Good. Did you see me? For some reason, my face isn't popping up.
I see you now, yeah.
Oh, perfect. All right.
Okay.
So you see the disclaimer up there? Are we ready to go?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker or call your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Yep.
So what do we got going on this morning, my friend?
So I'll take a look at the pre-market report. I think we did have a question yesterday at the end of the day you wanted to get to. Do you remember?
Yeah, I'll get that for us.
The short interest. I think I looked back, It was about short interest, but I forget exactly how it was worded. But if you want to put it in there, it had to, I think it had to deal with like short interest or short squeezes.
Yeah, she wondered if there was a spot on the site where wants to see if there's any sort of short interest or a possible squeeze in a particular stock. A short squeeze. That's what she was looking for.
All right. So we'll talk about that today. Okay. Short interest, short squeeze. But if you guys have any other questions, put those in the live chat. On YouTube, was monitoring them. He'll read it back to me. If you want to come on live and ask your question directly, we also put out a link to Zoom. Click on that link. That takes you over to Zoom. When you get there, click on raise your hand. You don't have to turn on your video camera, but you'll go live and you'll be able to, ask your question directly, navigate us and help us look at what you're looking at. This will give us a clearer picture of the question. So before I get to the short interest, let's start out with the pre-market report. Take a look at what's going on in pre-market hour, and then I'll start tackling that question from yesterday. Sound good, Will?
Perfect.
So this is the pre-market report. These are stocks that are trading in the pre-market hours. We have most active stocks, the biggest percentage gainers, and the list of biggest percentage decliners. Here I see 55 stocks made our percentage gainers list, 30 on the decliners. So right now, from that perspective, a little bit more bullish bias at the open. So let's filter this list to S&P 500 stocks, because this list will have anything that's trading in pre-market hours. That could be ETFs, it could be ultra ETFs, the leverage products, closed-end funds, units, rights, all that stuff, small cap stocks. So let's try to get a sense of what's going on in S&P 500. To do that, I'm going to filter out this list using a filter here in ETF. I drop this down. I got a list of ETFs by selecting SPY. That's the S&P 500 ETF. This report will get filtered by the holdings in SPY. So here I see 4 made the percentage gainers list, 5 on the decliners. So not a huge list here, a little bit, it's kind of even, right? I think the only one sticks out at me, I think HPQ is that one that Warren Buffett took a stake in, but you could hover over it. I believe that's the news that I heard this morning. Warren Buffett took a stake, and then OXY, I think that's another one Warren Buffett took a stake in recently. But not a very big list here. I would say kind of neutral so far. And if there are no questions on the pre-market stuff, I'll start talking about the short interest and short squeeze.
Yeah, no questions yet, but we did have a shout out from a new chameleon who joined for the first time, Shane the dog. He says, hello, everyone. Just wanted to say I love the new order sentiment and option order flow features. So awesome. Thanks for that. The man speaking right now, Dimitri, and the development team worked very, very hard on these new features and the development of them. So very much appreciated, I'm sure.
Yeah, thank you. Really appreciate it. So far we've been getting very good feedback on it, and it's been out, I think maybe a week now, right? So that's a very relatively new feature that's out there. So let's talk about short interest. And, people ask me about short interest data. They ask me about actually short interest data a lot. And really it's because of what happened after they saw what happened in AMC and GameStop, right? So after seeing that in those meme stocks, a lot of retail customers, because it's always in the news, about this, starting to get interested in stocks that could have a big short interest and that are potentially can pop really high. So I want to first discuss that, and we don't even put the short interest data on here, and I'm going to explain why. It's going to be more obvious to you. And playing a short squeeze like GameStop or AMC is it's very unlikely that you're gonna find one. Okay, and I'll show you why. These are something like GME and AMC rarely have. If you're looking for something to be up 30%, 40%, your odds in doing it in a call spread are way higher than finding a stock that is going to get squeezed and be up 30, 40% and be up enough for you to profit and for you to get in early enough. So we'll go through those steps. And so many people, and it's all because of the hype that was created around a couple of these meme stocks that popped. But the odds of you finding one like that are very low. But so first, let's talk about the short interest. And by the way, let me just show you your GME. It's not only because somebody was caught short and unhedged, but if you look at this chart, to make this stock go up, you need real volume, real buyers. It's not going to just go up because there's short interest in it. There's a lot of short interest all the time in stocks. To make it go up like this, GME, you see pop, it's going to take really high on you. This is a 3-year on 3-year chart. They'll go 5 years. All right. Look at the sheer volume it needs to push the stock up. So those short interest is not enough. You have to have a lot of people committing money and real believers that the stock has to be undervalued and deserves to be higher. Okay, so the short interest alone will not be enough, because there's plenty of stocks out there that have a lot of short interest, and the vast majority of them probably because people who actually are shorting are doing their homework. They're not just playing around. They're when they establish these positions, they're pretty confident that the stock's overvalued. The vast majority of them usually go down, from what I've seen. When you build up a short interest, when you see short interest, the thing is, what you're seeing on the news is much different than if you took a distribution of like all these stocks that have short interest, right? So the news kind of makes it look like oh wow, all you have to do is find a short interest and boom, it's going to look like that. So just to you guys know, this is what it's not the short interest, it's the volume pushing it higher, which by the way, even if the stock had no short interest, this type of volume can push a stock higher, right? That's what it takes to push a stock higher. It's a lot of buyers. So that, let me show you another in AMC. I think AMC was another one over here. So 5 years of data. You see the volume it's taking, but because you're looking at volume charts of 5 years, and that's where it sticks out. You could see that just those days alone, you need to either have large institutions or an army of, 10 million retail customers all going at it at once. So that's how, that's kind of like
That's what the Reddit crowd refer to themselves at, right?
Yeah. And
The Reddit army.
right. And you need to, so it's not just because there's somebody short. They really felt like the stock, not only was there a short seller there, but it was priced too low, right? That's how they felt, like the short sellers were wrong, and it should have been, and it deserves to be priced higher, right? So they had that in, that's what they're doing. It wasn't just like playing for like a quick, because remember when a short covering, when somebody has to short cover because they're forced to, happens fast and it's over, because the clearing firm will just buy that stock at the market and it's kind of over really quickly, so it's not going to be sustainable like this. And for you to get in on that also is unlikely. So just keep that in mind, that when you're looking for this, you're looking at a very low probability that you're going to find something like this unusual, right? Especially if you're taking all the stocks that have short interest, because that list is very long, right? The stocks that have short interest are very long and it's changing day to day. That's why I don't really even ever talk about it, but since this question came up, and I do get a lot of these emails after these meme stocks, so we'll just kind of discuss it and look at the data, all right? So the next thing is, well, show me the short interest data. So the data that you guys are seeing short interest, all right, it's not, people think like they see somebody's real-time positions, and it's not like that. So here's, I'm going to show you, here's FINRA, all right? So this is FINRA, and here's the schedule of short interest report dates, right? And what you're actually looking at. And I think you could download this data for free. I think you can go to some of the exchanges and they'll let you download it for free. But you're looking at one snapshot in time. That's very doing. So here's a schedule, right? They're telling you right here. They're taking the settlement date from January 15th. So that's January 15th, they take a settlement date and say, okay, show me the short interest, right? Well, that's the settlement date. The companies have to report it by January 20th. So January 20th, they report on January 15th settlement date. And then the publication is January 27th. So January 27th is the first peak you get from the settlement January 15th. All right. Now, short interest, could be created and you don't know where it's being created. Okay. A lot of the short interest is being created from dealers, because dealers are facilitating orders and they're balancing their positions, they're hedging their options. So you don't know if it's actually somebody sitting there on a short or it's a hedge and they're actually not short, they're delta neutral. And I'll show you that as the stock goes up, they might not need to buy the stock back. They might need to actually be selling more. Okay. So first, this is how the data comes out if you're talking about the short interest data that's out there. All right. So you could see the schedules. These are the settlement dates. This is when you first take a look at them. And, anybody who's been trading a long time know that whatever is on this date, it fluctuates from day to day. So it's a continued, right? Markets are continuously trading, reacting to news. So it's not likely that, it's going to be the same. Very unlikely, I would say. It's possible, but it's unlikely. And even if you have the correct short interest, you don't really know, are these people sitting on shorts that they'll need to cover, or are they just hedged against their options positions? And for example, they're hedging against their long calls. And if the stock goes higher, they get longer delta, they'll need to sell, they'll continuously need to sell more. Okay. Because they could always exercise their calls if the stock goes deep in the money and convert their calls to long stock. All right. So number one, that's why you guys could go download this. I think you could just go and download this data for free, but you could just see how from the settlement date to when they have to report it, to when you get to see that is, there's a big gap there. Okay.
A short position may have been taken off by then, right?
Yeah, exactly. It's a position that could be taken off. And a lot of times these short positions, I think, are going to be against a bigger portfolio position, right? So a lot of times that's what's happening. Probably, most of the time, because options are trading on some of these things, over-the-counter derivatives. Sometimes they might be VWAPing for a customer that they're going to cross. Like there could be lots of reasons that are just, it's not actually building up a short, but they're doing it for reasons to facilitate trades and keep an orderly market. Okay. So let's go back here and say, all right, if we don't have, the data, can the markets be signaling something that, there are a lot of shorts right now, more than, that are being built up. And a couple of ways we could do it is we can look at the options market and say, well, what are the options? Because the options markets are reacting in real time, right? So the options, before I show you the options market, what is a short? For you to sell a stock short, right? To go and sell a stock short, you have to have the stock first, right? You can't naked short it. You have to have the stock, and we call it the locate rule. You have to borrow it from somebody, okay? So you can't just not have the stock to sell. You need to go and borrow it. So let's say Will's long. I don't have any stock. I want to short it. I say, hey, Will, can I borrow your stock? And I promise to give it back to you when you need it. He says, sure. Maybe I pay Will some kind of fee. He lets me borrow his stock. Now I have the stock in my account. I could go and sell it, right? So I'm selling it short because I have an obligation to buy it back and give it back to Will. So that's how to do that. You need to borrow the stock, and there are regulations around it. It's called Reg Show. You need to locate, so you have to point and prove that you borrowed it from somebody who actually owns the stock, right? Usually it's held in street name, but that's how it works. And so there are a couple rules around that you should know, that if you can't locate it and you can't short it, and if you did short it and for example, Will doesn't own it anymore, like I borrowed it from Will sold his stock and I can't borrow it from someone else, well, I'm in violation. I have to buy it back. So it doesn't matter if I have enough money to hold out, stock's rising and I have enough money to hold out. If I can't prove that I actually am borrowing it from somebody, I have to buy it back. Otherwise I'm naked short. Okay. So that's called a Reg Show violation. And your clearing firm is handling that in the background. So they're constantly looking, they have a little bit of a leeway. So regulation gives them a little bit of time to go and find it, just to keep an orderly market. But if you're constantly on that threshold list, you might have to buy back. So here's a threshold list. I'm going to show you your stocks. This is a threshold list of stocks that are a Reg Show violation. This is a threshold list. This is every day, and it's failed to deliver positions. Okay, so when you're failed to deliver means you don't have the stock that you're lending, right? The clearing firm doesn't have the stock that they're lending now. So they failed to deliver, and here it shows how many days in the last month, or I think how many consecutive days there's a failed deliver, and how many days and percentage of days in the last month there's a failed to deliver. And here, this is not necessarily it's going to drive the stock up, because sometimes they'll borrow from somebody else or they'll buy it back. But even if they buy it back, doesn't mean that the stock has to shoot up if there's sellers out there that you can buy from. But the fail to deliver, when you're in violation of Reg Show, you have no choice. You have to buy it, right? That's the rule. That's the regulation. It has nothing to do with your, oh my God, I'm losing so much money, I have to cover. You have to buy back. You could be making money. You have to buy back because you're not, you don't have a locate. Okay. So that's a list here showing right now it's climbing. So that's one thing, a clue to where some of these stocks that have some short interest, but are having issues finding the place to borrow. And a lot of times it happens in low float stocks or stocks, that they just don't have a lot of stock out there. You could see like shares outstanding or very little. So when there are any short positions, it's hard to find who owns the stock and can I borrow it. So a lot of times it happens in those types of stocks, even like new ETFs. It could happen, and so forth. So that's one place maybe you could start looking. Where is it on the threshold list? And not from the perspective that this thing has to necessarily pop, but if you just want to see that, hey, there are probably shorts out there that you can't short yourself, right? The other thing is that there are, when you borrow stock, the less of it available to borrow, the higher the fee to borrow, right? So if there's a demand to borrow the stock because people want to short and there's not enough, then the fee to do it goes up. It's like renting a house, right? If you have lots of houses for sale or for rent, right? Not enough people trying to rent it, the rents go down. But if you have a lot of people trying to rent it and not enough, the rents go up. So to borrow the stock, if there's a high demand to borrow because people want to short it, not enough available to lend out, the fees go up. So you could check with your broker, right? The availability to short and the fees. But we could also look at the options market. So the options market could give us a clue, and that's over here. Under screeners, we created this synthetic long discount. And the synthetic long discount, what it does is it looks at the options market and says, well, if I could create a put call parity arbitrage, right? So I could get synthetically long a stock and I could short the underlying stock and have a perfectly hedged position. But if I could synthetically get long a stock at a discount and short a stock at spot, well, then I have a perfectly hedged position, except I bought synthetically at a discount, sold it and it, at a higher price, and at expiration, they converge and I make a profit. So that's the put call parity. However, if it's not possible for me to borrow the stock to short, or if I have to pay a fee, then I have to take that into consideration. And the options market reflect that fee that they're seeing in the stock loan department. So here's a couple of them. These are a list of stocks here, and I'll take this like ARQQ. This stock's like $15, right? $14.88. What this is telling me is in July 15th, expiration. If I buy the call and sell the put, on the same strike, that the market is $9.85, $12.45. So you could see here it's already below the spot price. Basically, if I pay the offer, it's the same thing as buying the stock at $12.45, but the stock is trading $14.88, which is saying that I could get long synthetically at a discount because somebody is willing to do it at a reduced price to get short. Okay, so that's another clue that something's going on in there where there is a demand to get short. They're willing to pay a high fee because it's either they can't get it in the spot in the stock loan, the cash market. They're willing to even do it in the derivatives market. So let's see how that looks. July 15th expiration. So here we go. See, here, the 15 strike. So if I buy the call at $1.70, right? If I add that $1.70 to 15, it's like paying $16.70 for that stock to exercise. But if I sell the put at $3.90, I bring in a credit. So let's see what that looks like. So here I get a credit of $2.20, right? So $2.20 minus 15. You could see my break even is here, 12.80, but the spot right now is 14.88. So if the stock sits here, doesn't go up at expiration, right? It expires 14.88, but synthetically I bought it at 12.60. So what this is doing is telling you here that there's a high demand already out there, enough that they're willing to pay you, a fee to get short, right? A fee to get short. The other one really quickly is in the skew. So I'm just pointing you in directions where you could start looking, but also in the skew. So when you have actually a reverse skew, an upward sloping skew, that could also indicate that there are air bubbles to the upside, and there's a potential that you see a pop from a short squeeze. So let me do that really quickly. I only have 3 minutes. So let's go screeners, options by expiration. And here I'm going to go to skew, right? So on the skew tab, let me sort it here. So by sorting this skew here is telling me this is the 25 delta put minus the 25 delta call. So you could see here, the upside call is skewed higher, downside put is skewed lower. So let's see that in IPOF.
Let me guess, a biotech.
Yeah, or is it one of those SPACs?
Oh, I don't know. My guess is the biotech.
Might be a SPAC.
It's a SPAC. Yep, look at you.
So look, let me go out to May 20. Let's do May 20. There's a lot of trading here, 14,000. So look at the skew. The at the money, look at the at the money. 15 implied volatility, 15, 13, very low. Look at the out of the money put, 9. It's offered at 2 cents. So $1 away, going down $1 away, you can buy this put for 2 cents. But look, going up. This is 94% out of the money. 94%. That's double, right? Almost from here. That's 12 cents a bit. So you could see this skew, reverse skew, right, is saying that, look, most likely this stock is either going to sit here or drift a little bit lower. But there is a potential. There's a potential, because what the market makers are looking at is that there's not enough stock there to borrow, if the stock starts going up, and there's probably air bubbles here, where if you're looking at the order book, you're not seeing the layers of offers you would want to see, right? So there's a potential there that something could happen where it's not a high potential, right? I'm not saying but there is a potential that you could see a big pop. More likely though than not, based on this at the money, see how most likely it's not going to move. But if it does, look, you could sell what? One of these calls, selling one call 94% away will buy you 6 puts 12% away, right? That's the skew. That's how much skew there is. And they're trading, right? 2,800 options traded there. So that's the market signaling. Look, it's probably not going to happen, but there's a chance that if it does, you could really see a big pop. Okay. And that's how, by the way, GME and AMC reverse skews, started to look that way as well. So, all right, we're right at 9:30. Hopefully I did a good review on the short squeeze,
Well, you did a whole webinar on the short squeeze.
Yeah.
People don't even know about these features in Market Chameleon, which is incredible. How deep you can dive on any given question is always incredible. But Kim, unfortunately, who asked the question, didn't join till very late. So like all
Okay.
our videos, any webinars we do, they are posted on our YouTube channel. So everyone should make sure they subscribe to the YouTube channel. That will alert you when we come on, when new videos are uploaded. But there is also another way to view the video from today. Kim, D, will you show her real quick how you view the videos on the
Yeah,
site?
so if you want to just see the videos from today or previous days, just click here, up here, videos. And this one, well, this one is today's, right? So this one is today's, but you could go see, I even put short interest because I knew the question was from yesterday. We said we would cover it, but those are from previous days. So, yep, let me know, hopefully that helped, and answer.
Yeah, Kim
some of the
definitely
questions.
watch the video if you have any questions. Join us tomorrow. She also had another question about finding 21 days of stock history. Maybe we can hit that tomorrow. But great
Okay.
job, Dima. The Chameleon
Sure.
community was really appreciative. We'll see you tomorrow, my friend.
All right. Thanks everyone for joining. Stay safe out there.